And good afternoon. Welcome into Market Talk for this Tuesday, January 25th. Great to have you with us once again. I'm your host, Jesse Allen. Thanks for making us part of your day. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com is where you can find us. Find all of our social media links there, streaming sources, latest news of agriculture, much more. It's all online at MarketTalkAg.com. Well, we have another day with wheat, the upside leader here amid all the tensions across the world, the Russian Ukrainian tensions, and all the geopolitical factors. Quarter beans had a decent day, following along with wheat as well. Got plenty to discuss. Let's bring in our good friend Matt Bennett with agmarket.net. He is joining us here today. He is traveling as it's meeting season, and I know Matt's a busy guy, but Matt, I appreciate you making some time to join us today. How are you, sir?
I'm doing great. How are you doing, bud?
I am doing fantastic, Matt. It's great to catch up with you once again and talk about these markets. And, Matt, we have a lot of issues going on in the trade right now.
Yeah, absolutely. There's
That
no doubt about it.
we have just a ton of things. Talk to us a little bit about what you're seeing with the trade. Again, wheat was the big leader here today.
Well, I just think everyone's scared to death to go short this wheat market whenever you're talking about the kind of unrest that we see over in the Black Sea region. There's no question that, if you're in a situation where you, sorry about that, we just had a fighter jet take off here from the St. Louis airport. But, anyway, whenever you see, you're going to hear a whole lot of that, I'm afraid, in that region of the world. And so, if you're trying to source, for instance, a cargo of wheat, you know what? Try talking one of these guys into going over there to pick it up. They're going to say, I don't think so, not right now. Or you're going to pay big, big bucks just to be able to get someone to go over in there and be able to pick something up. So what does that mean? A lot of that business is going to be shifted around in other places. Obviously, the U.S. is going to be one destination for wheat, especially for corn. I think you could be looking at both of those products certainly going to be available on the world market, much more so in the U.S. than what you're going to see in that region. So, those are big issues that we're dealing with. Let's hope cooler heads prevail, but I'm pretty concerned, with a lot of the stuff that I read and just, some of the avenues and channels that I go down, just looking at some of the military stuff that we're looking at. It's a little concerning. I sure hope that nothing major happens over there.
I definitely hope nothing major happens over there as well. Throw on top of that, Russia is one of the world's largest oil countries as well. What could that do to this oil market that, we're back above $85 a barrel now here today, Matt?
Yeah, absolutely. You look at this oil market and it's just been awfully interesting. You look at the chart, for instance, over the last couple, 3 weeks, and boy, it's been impressive. You've had quite the run in the oil market. A year ago today, we were over $30 lower. There's no doubt we've had some inflation creep in, but then when you start talking about adding to the inflationary situation, for instance, unrest in parts of the world where you see some of these commodities sold from, there's no question that it calls into question, what kind of pricing might we be looking at moving forward? Are we looking at triple digit oil on down the road? I don't know that I'd totally rule it out just yet, especially if we get into a full scale situation over there. So, it's going to be very interesting to see how it plays out. But by all means, I think there's a lot of folks right now looking at oil saying, I don't really want to short oil either.
Well, with all this volatility in the markets, led by wheat, and you look at corn as well, we got front month corn, that 620 range. It was up to 630 at one point today. If I'm a producer, am I putting in some downside risk here to protect some of these values if I want to wait and see what happens here with prices if they maybe have a chance to run a little higher?
Yeah, the interesting thing today is that you unwound that spread just a little bit. As of yesterday, the spread from March to July was an inverse of 11 cents. And then you come in here today and March corn's down a penny, July corn up 3.5, and obviously you start to unwind that just a shade, but still there's an inverse in the market, which tells you when there's an inverse in the market, they want your corn and they want it right now. And so, basis is strong, especially for this time of year. Whenever you're looking at January, after we just harvested a record 177 national yield, you don't typically see the overs running that we're seeing right now. So I'll tell you what, it's quite an interesting dynamic we've got going on. I don't think that it's necessarily going to be friendly, to basis moving on farther out, because I think you're going to shake a fair amount of bushels loose having this big inversion in the market. And if that's the case, then certainly we should see a little bit of a softening at some point. But, if you're sitting on a bunch of bushels, as you suggested, by all means, having some sort of floor in place is certainly something we need to consider.
On the flip side, soybeans, a little bit of a different animal with the bean market. South American weather is really the big driver there. And the short-term forecast has been fairly bearish, but we're expecting it to turn hot and dry again into February. What's that going to do for the South American crops? And we look at the soybean market, decent day today, but what are your thoughts with what is going on with the soy market right now?
A couple of three things to think about whenever it comes to soybeans. How much damage did they do with the hot and dry weather from previous? That's the thing, is that you continue to see different estimates, and it's almost a race to the bottom to see who gets the lowest estimate out there. And I think typically in that type of situation, what you find is that the market continues to probe for a lower number, and then finally the real number ends up, of course, above that lowest estimate somewhere. We don't know where that's going to reside, but no doubt that we did a fair amount of damage with 100 to 110 degree temperatures down there. Both Brazil, southern Brazil, and Argentina certainly were hurt. You also look at, yes, they're catching some rain, no question about it. It's going to alleviate some of the issues, but moving forward, they're still in a La Nina. It's a weakening La Nina, but by all means, it's not over and done with, which still suggests dryness and heat issues that you could see as they try to finish up that first crop, and then start thinking about the second crop. So I think the biggest issue I see moving forward probably is just as much with corn as what it is with soybeans. How's the safrinha crop get put in the ground, first of all? And second of all, do you have enough moisture to be able to get that crop to the finish line? Because I know with even a weakening La Nina, sometimes you really struggle to have enough moisture at the tail end of that crop.
We look at South American weather. We keep our eye on that. We keep an eye on geopolitical features, but we also got the Fed meeting today and tomorrow. And I know there's a lot of worry in the stock market about that, and that's going to spill over into commodities. I mean, are investors going to be looking for safe havens in ag commodities? Are they going to be putting money into the sidelines or something else? What's your thoughts with all the Fed issues and worries that are out there this week?
Well, I mean, there's no doubt when you start talking about 4 rate hikes over the course of a year, it's certainly going to have an impact on the market. JP Morgan 2 Fridays ago said 6 to 7 rate hikes over the course of the next year. That's probably getting a bit excessive. Anytime you start seeing rate hikes or even talks of rate hikes, interestingly, the market, the equities, if you will, start to take a bath, which in turn puts pressure on the Fed to back off and hold the phone just a little bit. And that's what we've seen happen in the last several years. So are you going to truly get 4 rate hikes? I don't know. Your guess is as good as mine, but Jesse, I know one thing you and I should have been doing yesterday and today, buying the low in this Dow or buying the low in the S&P, because I mean, we've seen an 800-point swing both days. It's just been an absolutely incredible market. As we speak, you've got the Dow up 106 points. Earlier in the day, we were trading down 700 and some points. I mean, it's just been an absolute roller coaster. My personal opinion is major weakness in the equities still should be looked at as a potential buying opportunity, just simply due to the fact that there's so much money out there looking for a home. Some of these purchase orders that you see come through, and a lot of it's with these block trades, but it's an incredible amount of volume that you see flowing in and out of these markets. And I think that there's still a fair amount of pin-up money out there that's looking for a home. So, yes, you could get wildly out of control on the downside, but if you do, I think that anytime you see these big moves lower, they're probably a long-term buying opportunity.
A lot of volatility in the market trade we're watching. Let's go over to livestock, Matt. Cattle futures have been under pressure here. We had that bearish cattle on feed report on Friday, and we've continued through with some of that here today. Monday was a pretty down day, but today, all in all, better than yesterday. What's your thoughts on this cattle market?
Yeah, I mean, you look at these fats, for instance, and there's no question that they've held together just a little bit better, I think, than what the feeders have. With that being said, yes, demand is awfully strong, but whenever you start throwing more feeders into the mix, the thing about it is, what did we expect? Some of these cattle guys have definitely been able to make some money over the last few months. Margins have been awfully good. Yes, we know packer margins have been even better, but bottom line is when margins are good for the cattle producer, expansion is something that you should expect. And so, the nice thing for most of us in ag is that, the other thing that it does whenever we add placements is it adds demand, for your corn market. So there's a lot of good things going on here. But what do we see for the cattle market moving forward? Still ultimately, we're not looking at an absolute abundance of cattle whenever we look to historical numbers. So, I've got to think that as strong as what demand is, people still have money in their pocket. They're still going to want to go out and eat a steak or stay home and eat a steak. And with that being the case, I think that fats will probably find some footing in here. I don't really look for a whole lot of trade under maybe the mid 130s, even when you get farther out. And I know we got a couple of contracts trading down in there, but I still look for a lot of cattle between the 140, mid 140 level, maybe even push up to 150 over the late spring, early summer time frame.
I asked this question yesterday when I was talking with a few folks, and I said, I wonder if maybe a little bit of a pullback in this cattle market, little consolidation, wouldn't be a bad thing to correct us just a hair to run us higher, Matt.
Yeah, I mean, it's been a stale market lately. I mean, every time we've kind of pushed up on those mid 140s, it seems like we just kind of run out of steam. So I kind of agree with you. I think you kind of chase some of your weak longs out of the market, consolidate a little bit, and then you've got the opportunity to see what demand does. I think demand's going to stay strong. Again, I think most people still have a fair amount of money in their pocket. Now if you see an absolute debacle in the Dow, you're probably going to have some consumer confidence issues, and that could change the scope just a little bit. But I don't see that debacle coming. If it does, I think it'll be a short-term event, but that remains to be seen.
Hog market has been on a tear. We are pushing those summer months over $100. Front months are closing in on it as well. What's your thoughts with just the positive uptone in this hog market lately?
I'll tell you what, when you start talking about China buying pork at the same time that India is getting more and more interested in buying pork, how in the world are you going to be bearish hogs? Even at $100, and that I've certainly been ouchy about buying $100 hogs in the past several months, but at the same time, if I would have been actually trading the way that I was talking to you, I'd have been getting my lunch handed to me. So, this hog market's been hard to figure out, but I can tell you right now, Jesse, demand is exciting whenever we look at this hog situation. Another thing that's kind of exciting is that, as you talk about this renewable diesel situation on down the road, you're going to be crushing beans more for oil than what we ever have here in the U.S., which means there's going to be a fair amount of soybean meal available here in the country. And I've got to think that expansion in the hog industry, could be something we very well are able to look at and do it profitably, especially if you've got the two biggest population centers in the world that are interested in U.S. pork. So I'm certainly happy with the way these hog prices look currently, but still, as always, as a producer, I think that you lock in some of these margins. Maybe you leave the upside open on some of them, but $100 hogs are tough to throw cold water on.
Well, Matt, a lot of things to keep in mind here for our producers as we move forward. Any final thoughts you have for us on this Tuesday?
Well, I think that these price levels that you're seeing, both corn and beans, are fantastic. Wheat, you name it, you've got $8 wheat out to the summertime frame. As a producer, lock in some worst case scenarios. Leave the room to run to the upside, but by all means, nobody knows what the next black swan event might be. And if you're super susceptible, which we all are, because we're going to put a super expensive crop in the ground this spring. There's no question about it. That means that we're very susceptible to a major turn down in the markets. Let's make sure that something like that doesn't strangle us.
Well, Matt, I know you guys can help out at agmarket.net. You have a lot of information on your website as well as the app. And you guys have your winter meetings coming up, I know, next week in Indianapolis and then February 7th in Kansas City, correct?
Yeah, absolutely. We got a pretty good lineup. I mean, not to mention some of the folks that we've got in house with the opportunity to speak. We got Dave Hightower coming in, and over in Kansas City, Tyne Morgan and Drew Lerner, and then we got Kirk Hines over at over at Indianapolis. So we've got a lot of folks coming in that I would say are experts in their particular field, or someone that typically is a pretty hot commodity whenever it comes to getting people booked for meetings. So we've got really good sign-ups so far, and we're excited to get in front of folks and kind of help them figure out how we're going to navigate some of this risk here in 22.
Well, I know folks can learn more agmarket.net. That's the website, agmarket.net. Matt Bennett, appreciate the time. Thanks for catching up with us while you're traveling. Safe travels, sir. We'll talk to you soon.
Yeah, absolutely. Have a good one, bud.
Matt Bennett with agmarket.net, our guest today here on Market Talk for this Tuesday, January 25th. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.